Hello, and welcome to today's webinar hosted by Left Brain Professionals. I'm Steve Bressler, and I'll be your host moderator today. If you need help at any time, you can email us at support@leftbrainpro.com or use the chat function within the Flow platform. Let's go over a few housekeeping items today. Today's webinar will be hosted on the Flow platform, and you should see a small toolbar with 4 icons in the upper right-hand corner of your browser window. The first button will mute your audio. The second button will put the webinar into full screen mode. The third button enables the chat and Q&A functions, and the fourth button enables the settings. Please enter your content questions in the Q&A panel at any time during the presentation, and we'll address as many questions as we can. Use the chat feature to chat with hosts, presenters, and other attendees. We do ask that you please do not enter your content questions in the chat panel, as they may get lost among other conversations. If you do have any connection or audio issues, we have a couple of suggestions to help out. Turn off your VPN, test the system using the links provided, exit and re-enter the event, try using a different browser, or connect from your personal PC, phone, or tablet. And lastly, you can contact the Flow support. Now, in order to receive credit for today's presentation, you must respond to 3 of the 4 polling questions. Certificates are generated automatically and will be emailed within 48 hours after completion of the webinar. And a survey will display in your browser at the end of today's webinar. Please take a few moments to answer the questions and provide any feedback. The recording of today's presentation will be available on our YouTube channel, and the link will be included in the follow-up email. So thank you for your attention, and without further delay, I will turn it over to Robert for today's content.
All right, well, good afternoon. Thank you for joining us again here for our monthly webinar at Left Brain Professionals. My name is Robert Jones, and today's topic is accounting for SCA contracts. A little bit about us here at Left Brain Professionals. If you are new to joining us, we are a boutique accounting firm that works only with government contractors. We practice primarily accounting system design, implementation, and audit support. We do a lot of work helping clients implement their accounting system so they can achieve that adequate or approved status. They can pass the SF 1408. A lot of work with indirect rates, incurred cost proposals, and various DCAA audits. You've met my colleague, Steve, and we have a new colleague, Suzanne, who just joined us last week. So if you contact us, you'll hear a response from one of the 3 of us. Our learning objectives at the end of our hour together today, our 60 minutes together, you should be able to identify key SCA contract accounting requirements, explain the creation of different or additional indirect rate pools, and describe the proper treatment of wages in lieu, and its impact on indirect rates. We do have a polling question that let me get kicked off there, Steve, if you want to do that.
Okay. How much experience do you have with SCA contracts? None, 1 contract, 2 to 4, or I am an expert? We will leave the poll up here for 20 seconds or so and give everyone a chance to answer. Okay, it looks like a vast portion of the attendees have voted, so we'll go ahead and stop that poll and see what came out.
So it's not letting me see the final results. I'm not sure what
It
happened.
did. A majority of folks said one or none, Robert.
Great. All right, I'm going to go back to our slides and dive into our content. So a little bit of background here and to set the stage for our conversation today. This session focuses on the accounting aspect of SCA contracts, which does touch on some of the unique compliance requirements of SCA contracts. Please note that this is not HR or legal advice, and that when we're talking about SCA contracts, you should involve an HR and or legal counsel who are well versed in SCA contracts, because again, some very unique requirements there. All right. For SCA contracts, we're talking about the McNamara-O'Hara Service Contract Act of 1965. This applies to contracts for services in excess of $2,500 and has four basic requirements. One is the minimum monetary wages, minimum fringe benefits, safe working conditions, and the posting of requirements at the worksite. Some of the key SCA contract accounting requirements. The first is being able to track SCA versus non-SCA hours, wages, and benefits. And I have some examples to show you in calculating this a little later on. But right now we're just going to talk about what the requirements are and how we can achieve those. So we do need to have a timekeeping system that accurately identifies intermediate and final cost objectives. And you'll see there that I put the SF 1408 note in the parentheses because that's a basic requirement of the adequate accounting system, right? In order to pass the SF 1408, timekeeping is always one of the key things that we talk about. And obviously, as we start talking about SCA work and being able to track SCA labor versus non-SCA labor, the way that we'll be able to do that is through the appropriate job and task setup in our accounting and our timekeeping system so that employees can charge to the correct place. SCA contracts or CLINs within a contract need to be clearly identified. So you could have, for example, on a contract, CLINs or certainly labor categories where some are SCA and some are non-SCA within that contract. So you're going to want to make sure that you have that identified and delineated, again, in the accounting system and in your timekeeping system. And you want to have separate GL accounts for the SCA and the non-SCA wages and benefits. Now, we take the approach here of actually breaking out separate GL accounts. In theory, as with many things in accounting systems, you might be able to use some type of tag or code part extension, some other mechanism to break that out such that you might only have one labor account and you're otherwise able to identify the SCA versus the non-SCA labor. That certainly might work. In this particular case, we like to take the approach of having separate GL accounts so that when I look at my cost of goods sold or my direct costs, I have a section for direct SCA, a section for direct non-SCA. Then when I get to my fringe, which is going to be a key thing, I have to break that up. I can have my fringe SCA, my fringe non-SCA, and then even above that, within my revenue area, be able to have a revenue for my SCA and revenue for non-SCA so that I can calculate my margin on SCA versus non-SCA stuff. Again, a couple of different options in how you do it in your accounting system, but you definitely want to be able to identify those things separately. When we're talking about calculating the fringe benefit amount for H&W, that's the health and welfare portion, or H&W. It's the total of all benefits that are not legally required except vacation and holiday. And the key is to pay the wages in lieu for dollars that are not spent on the benefit. And so that's always an interesting thing that some companies run into. So you're going to have to be able to calculate within the month for those employees who do partake in benefits, right? So they might be taking health, dental, maybe some supplemental insurance. Maybe they've chosen to participate in a 401k plan or something like that. So you're going to have to calculate the number of hours that they worked in the month, the total H&W amount that they should receive. You have to back out the portion, right, that you're paying for these other qualifying benefits, and then pay the difference, if there is any, in the wages in lieu. So some of the things that count as qualifying fringe benefits for H&W: death or life insurance, disability, advanced age, retirement, illness. So that illness could be, again, one of those supplementary AFLAC type of policies. Medical expenses, again, that can be one of those AFLAC or other supplemental type policies. Hospitalization, such as regular health insurance, and supplemental unemployment benefits. Now, here's another area where the wages in lieu gets some people tripped up, and we always want to make sure that we cover this clearly. So wages in lieu does not affect, replace, or alter the base wage. Let me give you a perfect example. If you've got an H&W requirement, and we're going to show you what a wage determination looks like in a little bit and how to find that H&W amount. But if you've got an H&W requirement, let's say it's $3.50 an hour, and you're paying somebody, and maybe the minimum wage, let's say, is $12 an hour that's listed in the wage determination. So you have to pay them a minimum of $12 an hour, and you have to pay the $3.58, or again, whatever that amount is, for the H&W. You cannot, in my example, say, you know what, I'm just going to pay them I'm just going to pay them $15.58 an hour, right? I'm going to add the two together. I'm just going to add the two together. I'm going to pay them $15.58 an hour, and I'm done, and I'm good to go. That is not acceptable. Now, again, you might be in a situation where you are paying more than the minimum wage, and that could be because, you know, you're trying to attract somebody. You're dealing with market prices of labor, which is an issue right now, right? So if people have the opportunity to go to work for Amazon warehouse or some other places that might be paying more than you are, so you might actually have to pay more than the minimum wage that's listed in the wage determination to attract and retain employees. But that does not, you can't use any of that to alter what would otherwise be the H&W. So there's no crossover between those. The wages in lieu must be reported separately on the pay stub. So if you do have a situation where you are paying that out, we cannot include that in the same line item. We need to make that very clear. Wages in lieu, this is also an area that gets people tripped up. It's treated as fringe, similar to a paid absence, for rate calculations. And so in order for us to do the indirect rates, because it is a payment in lieu of benefits, right? It's not a, yes, it is, we are paying them cash in lieu, it might be a better way to think of it, but we're not changing the base labor rate, right? So all we're doing is saying, you know, we have a minimum fringe requirement to pay you this. If you take health insurance or some of those other qualifying items, they count towards that total dollar amount that we need to pay you. But if we end up paying you cash in lieu of that, it's really still a fringe benefit because it falls into that same category. So we still keep that amount in fringe. And you'll see that when I put my Excel calculation on the screen a little bit later. With wages in lieu, these are wages that are subject to employment taxes for both the employee and the employer. So that's one thing to keep in mind. And they can be paid into a qualifying retirement plan to avoid the employment taxes. Notice my little asterisk there. There are some very specific requirements around that. And again, this is one of those you certainly want to work with a 401k or other retirement advisor, an HR advisor who understand the unique SCA compliance requirements. We're here to talk today to talk about the accounting aspect, not necessarily the legal and compliance aspect of SCA contracts. All right, we've got another poll question. Let me get this launched here.
Okay, the wages in lieu.
Okay, Steve.
Oh, is my audio not coming through?
There you are.
Wages in lieu can be used to offset the minimum wage requirement. True or false? And actually, we've got 40 some votes in already, so I'll give you guys another 10 seconds or so to get your responses in, and we'll take a look at the results. Okay, we'll do about 5 more seconds. And I'm going to go ahead and stop the poll here. And let me see if the results are. 80% have said false.
All right. So, wages in lieu can be used to offset the minimum wage requirements. The answer to that is false. Remember what we just said is that I still have a minimum requirement that I have to pay. I might actually even be paying more than the minimum requirement, right? Because of economic factors or maybe because of seniority if somebody's been around for a while. But I can't commingle and otherwise offset wages in lieu or the base wages with each other. So the answer there is false. All right, let's go back to our slides. All right, so how do we know what these minimum requirements are? We find this out through a wage determination. It's a written determination. People refer to it as the WD, the wage determination. It is by geography for listed labor categories. It does have the included health and welfare or H&W amount, as well as any special requirements that are related to that particular wage determination. The wage determination should be identified in the RFP. So if you're responding to an RFP, they should be telling you which one is applicable. If you don't have that information, certainly you would want to contact the contracting officer through the questions process and make sure that you have the correct and appropriate information so that you can price it accurately. And note that any increases in wages or benefits that are covered by a wage determination will be handled as a mod, right? So when the wage determinations are updated, the contracting officer should incorporate the updated wage determination into the existing or active contract through a mod. And at that point, if there's obviously a requirement for you to update pricing, that's when you would do so because of the change in the mod. Quick example of what a wage determination looks like. So on the left is the first page, and we realize this might be a little small, so it wasn't really intended for you to read in detail, but just so that you can see what it looks like. You can get the wage determinations from the sam.gov website. So you can go there right now and search for wage determinations. On the left, you'll see at the bottom of that page, it starts to list out the labor categories with the rate. On the right, and again, this was, I think this was 2 out of 17 pages, if I recall, in this particular one. On the right, you can see the health and welfare section, and I had a strange number pop into my head. Don't ask me why, other than I have a bunch of things running through my head, and they get jumbled up at times. But for this example, the health and welfare was $4.40 per hour. So it's going to call out that specific information in your wage determination. Let's talk about some typical problems with SCA contracts and things that people run into and things that you'll obviously want to avoid. The first is underpayment of service workers due to a misclassification. So you want to be very careful that in your timekeeping and in your HR system and your project setup that you know the labor categories that are part of the wage determination, that are part of the SCA contract, that you have people classified correctly into those labor categories, that they're reporting their time correctly, because all of that is going to be important to compliance in the contract and to your proper costing and pricing of the contract. I'm going to skip the second one for the moment. Failure to make timely failure to make timely payment of wages or fringe benefit contributions. So we do have to make sure that we are paying those contributions on a monthly basis. We can't wait and say, oh, I'm going to wait till the end of the year to catch up, or, you know, in the case of if you said the wages in lieu you elected to pay into a retirement plan, there are some, again, very specific requirements of when those contributions do need to be made. Number 4, lack of proper record keeping when cash payments are made to satisfy the fringe benefit requirements. This is an area that, you know, part of this ties back to that wages in lieu, and are you overlapping or trying to use wages in lieu, or trying to use, I should say, maybe paying a higher base wage instead of paying the wages in lieu or something. Your records need to clearly identify all of these amounts, because if you, go through an audit, if you are ever, if somebody files a complaint saying you didn't pay them appropriately, you're going to have to be able to support, right, how you got to that information. Number 5 is failure to notify service employees of the applicable wage and fringe benefits. There's a notice that has to be posted at the work site, and it needs to be in a prominent and accessible place. Remember, that was one of the requirements. Number 4, I believe, of the 4 requirements when we talked about the McNamara O'Hara Service Act in the beginning, right? There were 4 requirements: minimum wages, minimum fringe benefits, and the notice to employees was in there. Failure to use conformance procedure for unlisted classes of employees. So there's a special process that if we've got classes or labor categories of employees, how we handle those. Failure to segregate and keep records spent on contract work and non-contract work for employees who do both. That can also be a situation where you might have employees who work both SCA and non-SCA contracts. They might do direct work. They might also have some indirect or non-contract oriented work. So again, a lot of that ties back to the timekeeping system, making sure that we have appropriate projects and tasks or CLINs that are set up in the accounting system that then flow through to the timekeeping system, so that the employee can select the appropriate, again, project and task, making sure that the employees are trained to properly, they know which one they're supposed to select for the work that they're doing. Again, all of that really tied back to the timekeeping system. Number 8 is failure to implement rate increases, if any, in a new wage determination in a multi-year contract subject to annual appropriations. And then I think this ties to one of the questions we have here. It says, is it typical that contracting officers wait until an option year renewal to apply a new wage determination, or as soon as a new wage determination is issued for an area? I believe that the correct answer is that it should be when the new wage determination is issued, because you have an effective date for the wage determination, and you want to make sure that you've implemented that at the appropriate time, because again, that can be a compliance issue if you're executing work, and you should be paying people then, again, those minimum wages and the minimum fringe benefits for the time period that's identified in the wage determination. Some compliance complexities when we talk about SCA contracts here. We have SCA covered employees working in more than one location, right? So remember that I said that the wage determination is set up by geography. So you could potentially have an employee, especially if you had an employee who's traveling for work. Maybe the type of work that you do is that you actually execute that work in different geographic locations. So if you have an employee who maybe this week they work in this location and next week they work in a different location, et cetera, then again, you got to make sure that you're paying them the minimum wage for that geographic location for the labor category that they're working. And because of the geography change, then the minimum wage amount could change as well. Now, for some of our clients who do SCA work, that's not as much of an issue. They might have SCA contracts in different locations, but their employees tend to be in one place. For example, we've got one client that does call center work, so the employees are always in one location, but this client does have multiple SCA contracts for different call centers. So they might have a call center here and a call center here and a call center here. But again, the employees in that particular case are staying in the same place. Now, if they had a situation where an employee, went to another location to work for a period of time, then they would certainly need to address that and identify those wages accordingly. Having SCA employees working in more than one position, right? You might have a situation where you have an employee who qualifies for a couple of labor categories, and maybe they're filling in for that. I could think, for example, in the case of, I don't know if this is going to be the best example, but I can think in the case of like a call center, you might have an employee who qualifies as a senior level person on the floor in terms of answering calls, but they might also be doing training of new employees. That might be part of their job, right? And the training job category, labor category, may have a different minimum wage than the wage that they're paid when they're answering phones on the floor. So again, if somebody's working in more than one position, that's also, again, going to tie back to how your project management and your timekeeping system are set up, because the employee is going to need to be able to identify, I worked 6 hours today answering phones, and I worked 2 hours today, training employees. Or, it even could be full days or whatever the case may be. Having SCA covered employees working on SCA and non-SCA covered contracts. Mentioned that a couple of slides back, right? But we could have, and again, very likely that we have a situation where maybe we have some commercial and some government work. And, an employee might work on both of those types of contracts. And so we might pay them one wage. We might pay them a different wage. We may not pay them a different wage. It depends for when they're doing SCA versus non-SCA work. But obviously, if they're doing non-SCA, if it's a non-SCA contract, such as a commercial contract, then I don't have the requirement to pay the H&W for the hours that they worked. Again, the wages is a separate conversation, may or may not be the same wage, but I don't have the requirement to pay the H&W as an example. I could also have potentially employees working both CONUS and OCONUS. And again, there could be obviously issues there with different wages and locations. All right, our third polling question, and let me get this launched here. Okay.
Okay. The complexities of SCA contracts include all of the following except employees working on multiple contracts, employees paid more than the minimum wage, employees working in multiple locations, or a misclassified workers.
This is an interesting question. It's a little bit tricky, so be curious to see how many people get it correct.
We've got about 70% responded, and we'll give it about 10 more seconds, and we'll take a look at the results. Okay. I'm going to go ahead and stop the poll here. And we've got 53% saying B and 39% coming in with D, misclassified.
All right, so for the complexities of SCA contracts include all of the following except, right? So it's the except. If I have employees working on multiple contracts, that's a complexity. If I have employees working in multiple geographic locations, that's a complexity. If I've misclassified my workers, that's a complexity or an issue. Do I have a complexity if I'm actually paying more than the minimum wage? Not really, right? There's nothing wrong with that. And again, as I said before, and especially in today's economic environment and the job market, we may be paying more than the minimum wage that's listed in the wage determination because it's the only way that we can compete. And we're seeing this with some of our, with some of our clients. It's the only way they can compete with the Amazons and other people out there who are paying $18, $20 an hour, to work in a warehouse, picking out purchases, right, and putting them in a box. All right, let's go back to our slides. And I know we've got some other questions. It's good to see those. Just a reminder, if you can, please put your questions actually in the questions panel, because there's some other stuff going on in the attendee chat. And so those questions might get lost as other people chat. So if you do have a question, if you'll please put it in the questions panel, then we have better visibility of it. And we'll make sure that we try to answer as many as we can during our time together today. All right, let's now talk about indirect rate pools and what it means to have an SCA contract and how that might impact our indirect rate structure. So we're going through this with a couple of clients right now who are looking at what's going on in their organizations. They're looking at it from a costing and from a pricing perspective. And the pricing piece really comes into play, especially when you have a mixture of SCA and non-SCA work, whether that's government and commercial or just other types of government work potentially, can really cause some problems. And you'll see an example here in a moment. But we're going to talk primarily about splitting fringe and splitting overhead. I do also want to say here, if you want a deeper dive on indirect rates and this concept of splitting out and changing your indirect rate structure, we do have some other videos that we recorded in the past. You can find those on our YouTube channel. In our follow-up email that you'll get, there'll be a link to our YouTube channel, but you can go to our website and access the YouTube channel. You can also go to YouTube and just search for Left Brain Pro, and it'll pull it up. And again, we've got a couple of webinars out there that do a much deeper dive specifically on calculating indirect rates, and one on advanced indirect rates, where we talk more about the entire process. Here, a little more focus today on splitting fringe and splitting overhead. Okay, so obviously, we've been talking about this SCA versus non-SCA. We've got SCA direct labor. We've got non-SCA direct labor. We've said that when I have SCA work and I've got this wage determination, I've got this minimum fringe benefits that I have to pay. And usually what happens, what we often see, especially for things like call centers or other lower skilled jobs, the amount of the minimum fringe benefits is relatively high when you compare it to the minimum wage. Now, certainly there are some, if you look at the labor categories of a wage determination, there are some nurses and other people in there that are going to be higher wages where this has less of an effect. But when you're looking at paying a minimum, the example that we had up there was $4.40 an hour. When you're looking at paying a minimum of $4.40 an hour in H&W for an employee that might be making $15 to $20 an hour, that's a pretty significant impact on your fringe. And you got to remember that H&W is before employer taxes, such as your FICA, FUTA, SUTA, your workers' comp. So you're going to have all of those, and you're going to have all of the H&W stuff on top of that. So again, when you add that up and you compare that to somebody making $15 to $20 an hour, pretty significant impact. That's why, again, when we have these organizations who say, hey, I'm doing a fair amount of both SCA and non-SCA work, we say, okay, now it's time to split this fringe so that I can align my SCA fringe costs with my SCA labor, and then do the reverse with my non-SCA. Okay, SCA, I say, will usually be higher, certainly in the cases that we're dealing with. Not always true, but in what we're dealing with, will often be higher because of the higher cost of the benefits that I've talked about. Remember that the fringe amount does include the wages in lieu because it is a fringe aspect. And now when we switch over and we start talking about splitting overhead, what comes into play here is a situation of contractor site versus client site. So those of you that have been with me on webinars before, and we've talked about these indirect rate structures, and we've talked about splitting overhead, you've heard me say, basically that last item on the screen there, sometimes what happens is your client will come to you and say, hey, why are we paying overhead for your employees who are sitting at our facility, right? Your overhead has facilities and computers and a bunch of other stuff in it. And guess what? We're paying for the facility. We got the rent, we've got the telephone, we're paying the internet. Many times the client is providing computers and everything. And so literally it's just your people showing up there to work as if they were showing up to your office. And so the client says, why are we paying all of that? It should be a lower rate since you're not paying any of these expenses. And certainly that comes into play when you have the call centers, like a couple of our clients do, because right, the client many times is already providing that call center. All you're doing is providing the people to show up and be there to do the work. So this is where we end up looking at splitting overhead into a contractor site versus a client site. And as the second item says there, right, SCA work often involves work at that client site. And what you're going to do when you break these up, so just like I'm going to back up here for a moment, when we talk about splitting fringe, this is where the math gets a little tricky. Some people get caught up in this. When we talk about splitting fringe, we're talking about I've got to have my SCA labor separated from my non-SCA labor. Then I've got to have my SCA fringe expenses separated from my non-SCA fringe expenses so that I can then properly calculate an SCA fringe rate versus a non-SCA fringe rate. Same concept is going to apply when I talk about splitting overhead. And again, in my example here, if I say that I'm going to do a contractor site versus a client site, and in the case here, we're talking about services. So labor is going to be, direct labor, I should say, is going to be the base of my overhead. Then I'm going to have my contractor site expenses, my own site expenses. So that's going to have my rent, my utilities, snow removal, yard maintenance, all of that stuff is going to be in there, as well as my telephone, internet, computers, all of that's going to be in there. And I'm going to have to be able to identify the work that's then performed at my site, right? So just like I had to be able to separate the SCA stuff now in overhead, I'm going to have to say, okay, well, which direct labor has been performed at my contractor site versus which direct labor was performed at a client site. So I'm going to have another way in my accounting and timekeeping system to be able to separate that out and calculate this properly. And then my client site expenses from an overhead, I might still have some legitimate overhead expenses, right? So overhead includes other things like some training. Maybe we are providing computers to those people. So maybe the client is only providing the physical facility. Maybe we provide our own computers. It's going to vary a little bit depending on the contract. It's going to vary depending on, how your organization is structured and what you're doing. But you're going to have to be able to identify what are the expenses that are related to client site work versus what are the expenses that are related to contractor site. And in fact, you may end up having to create an intermediate kind of pool where you say, hey, we have these overhead expenses that really apply to both, and then you have a way to allocate that out. So it's definitely going to require a little bit of work. When you do all of this and you do it correctly, you should end up with 4 rates. So you end up with an SCA contractor site and an SCA client site rate, right? Because you could do SCA work at your facility. It's not required that you do it at a client site. And then likewise, you could have a non-SCA contractor site and a non-SCA client site. And if you think about that, just go back to if you originally started with one indirect rate structure, you had a single fringe and a single overhead, and you split fringe, well, you would automatically already have 2 rates. You would have an SCA versus a non-SCA. And now we've said we're also splitting overhead. So now I have a contractor site and a client site. So if I multiply that through, I'm going to come up with 4 rates. And here's an example of what it looks like. So under the blue column are my pools there. What I want you to see, look first only at the first gray column that says single. So this is my approach. It says I've got a single fringe and a single overhead. You'll see that my single fringe rate is 44.92%. My single overhead rate is 28.11%. And I only have one G&A, so it's by itself down there in the corner. Now, when I look at splitting out SCA versus non-SCA, you see my example here that I've split my pool. And if you add all that up, you'll see that it does tie, that if I add my SCA and non-SCA numbers, they come back to my single. But when I split them up, now all of a sudden my SCA fringe rate is 69.3% and my non-SCA fringe rate is 25.69. Now, I did not take these actual numbers from our client, but we do have a client right now that their scenario is very much like this. Their blended rate is somewhere in that 45% range. And when they split it up, they ended up with something in the 25 and 60% range. So these are very realistic results. Same concept for my overhead. My client site rate, as you see in this example, is about half. Same thing for fringe, is about half of what the contractor site is. And my next slide takes this through to the cost multiplier so that you can see. So this is where I multiply my fringe, overhead, and G&A through. I put a pay rate there of $20 just so you can see. Now you can see the burdened rate. So in a burdened example, if I had a single rate, my burden rate, if I was proposing it, again, this was before profit or fees, so we're just looking at burdened with cost, was $43.16. When I created these 4 separate rates by splitting my fringe and my overhead, I now have prices that are more aligned with the actual cost drivers. And so I can see that my SCA work, I should have been billing out at a higher rate. And in fact, you can see in my variance column there that when I was, for example, the SCA contractor site, when I was billing that out at my single rate, I was really under billing by $10.23 per hour. And you can see down below on my non-SCA stuff, I was actually over billing by $3.52 and by $8.30. And so some people might say, Robert, does it really matter? Can I do this in a single rate? Do I really have to break this out? You certainly could. You could certainly maintain a single rate. There's no reason to say you can't. But obviously part of what you're going to see here is you might run into some competitive issues, certainly on your non-SCA stuff. If your SCA rate is higher, then you're going to be overpricing your non-SCA works. That may cause issues. You might be underpricing your SCA work. And if you get the mix, if you've heard me talk before, I've talked about a product mix or a service mix. When we have one single rate, that single rate is assuming that that product or service mix doesn't change, meaning that I'm selling the exact same amount of each of those labor categories each month, each year, and nothing is going to change. If that were true, you could have a single rate, and in theory, you wouldn't necessarily have any issues. But the moment 1 month or 1 year that you start selling more or less of one or the other, then you can see that that's going to get out of whack, okay? And that's where, again, clients call us and they say, hey, we're doing this work, but we're not making much money. There's not much left at the end of the month. What's going on? All right, let's talk about, again, some of the requirements. Some of these I've already mentioned, so it's a little bit of a refresher here. So your timekeeping and your accounting system must be able to track the SCA versus non-SCA wages and benefits, and be able to identify costs and labor on the contractor versus the client site. The split pools must be properly aligned with the split base. That right there is probably the #1 issue that we find people have trouble with. Again, it ties back to this here, that in the case of overhead, if I'm going to have contractor site and a client site overhead, the base of my overhead is going to be direct labor plus applied fringe, but direct labor is my driver there. I need to know the direct labor that is performed at my contractor site, at my site, versus the direct labor that's performed at a contractor site. Because if I just take total direct labor and put in the base of both of those separate overheads, I'm going to have problems because I can't use the same amount, the same full amount in both. If I've split the pool, I have to split the base and they have to align. So that's what I'm saying here on the rest of this slide. My SCA benefits are then over or allocated over SCA wages. Same thing for my non-SCA benefits. My contractor site expenses are allocated over contractor site wages. My client site expenses are allocated over client site wages. So another polling question here. Let me get this launched. All right, Steve.
Accounting for SCA contracts is easy. True or false? All right. Answers are rolling right in on this one. And I'm going to go. Oh, go ahead, Robert.
No, I was just going to say, I see we've got a few questions lingering, I think, in the attendee chat. I'm going to get to those. If you've got other questions, go ahead and put them in the questions panel, and we'll try to answer as many as we can today.
It looks like we have most of our responses. I'll do another 4 seconds, and we'll take a look at the results. And we had 90% saying false. That I would agree.
Right. I think everybody who has anything to do with SCA contracts would absolutely agree. All right, let's get back to our slides here for a moment. So I do want to go over a couple of things before we get into the questions. So this is feedback from one of our SCA clients. I said, hey, if you were going to teach this webinar, what are some things that you would want to make sure that people walk away with? And a couple of these items on here, again, tied to some compliance aspects, but they certainly do flow over into accounting. So number one, if the contract includes Executive Order 13706, requiring you to pay sick time, that the H&W amount is different. So pay attention to the requirements because, again, that's an issue. I think he mentions it elsewhere, but I do also want to say, I think what he's got down here in number 3, he's got some counties have more holidays than others. You also have to keep in mind that you could potentially be doing work in a locality or a state that has some minimum sick pay requirements. So you want to make sure that you're looking not only at just the wage determination, but are there any state or local things that need to be further taken into consideration for full compliance, okay? Number 2, if you win a contract and are hiring people from the incumbent contractor to support the same contract, you're required to honor the time that they worked on the previous contract. This gets a little tricky because now you've got to be able to account for that, right? The previous contractor had a liability for these employees, and you're going to need that. And somebody asked when we talked about this before, yes, the incumbent contractor has to share this information. So you're not going in blind. They do have to provide to you this kind of information. If the contract contains this FAR clause, SCA rates should not be escalated. I think this ties back to as well maybe one of the questions that's lingering. In this case, SCA rates will be escalated when the contracting officer incorporates the updated SCA revision into the contract. Note that if you escalate employee pay before it is incorporated in the contract, you may not be eligible for an equitable adjustment. I think this ties back as well to Dave's question, and we have a little bit of a timing issue in that, certainly we have to make sure that the contracting officer is including it. And Dave, you've got a question that I'm not sure that I can provide the best answer to. Maybe the best answer is that the contracting officer absolutely has to do the mod. Whether they should be doing the mod when the wage determination is released or when the option is exercised is a little unclear to me at the moment, but I'll try to get you an answer on that. The next one is also a little tricky one. If you have SCA employees and they leave the company, you are not required to pay the sick time, but you are required to pay the vacation time. However, if that employee comes back, and again, one of our clients sees this on a regular basis, and they return within 8 months, you must reinstate the sick time that they earned. So let me say that again. And we've seen this actually across a couple of clients in the SCA world, especially in the call center. Sometimes because some of those call centers ramp up and ramp down on seasonality of volume. But if you have an employee and they are there and they have vacation time that they've earned, just like any other employee, you're required to pay out the vacation time upon their termination. You are not required to pay out any unused sick time. However, if they had unused sick time and they come back to work within 8 months, you have to reinstate that amount. So you're going to have to track that. And he says, because the wages are different by county and the differences can be significant at times, make sure that you pay close attention to the work location and that you've pulled down the correct wage determination to pull in that those wages. All right, I'm going to look at these questions here. I have a question about wage determination required sick days and holidays. Can we bill our federal client hourly rates for sick days and holidays that we are required to provide to our contractors? So that should be just part of your fringe, and your client is effectively paying for that through the fringe pool, right? So that would be true on any type of contract. Where things get a little tricky, and we see this sometimes, maybe not necessarily in this area, we do see sometimes with, certainly with SCA contracts and with some other contracts where the contract requires certain things, and it'll be called out at a contract level, requires for certain things to be paid or treated as direct on the contract that the employer or the contractor otherwise treats as indirect. So in that case, I'm always going to tell you to defer to the contract. But again, typically here when we're talking about sick days and holidays, those are in your fringe pool. They're in your fringe rate. They're part of the rate that you're then quoting and billing. And so there's no separate charge for the sick or holiday because it's already built into your rates. Do benefits paid reduce the taxable amount of the H&W requirement? Absolutely. The taxable amount of the H&W, when we were talking about wages in lieu, and I said that wages in lieu was subject to employment taxes for both the employee and the employer, that is for the cash that's paid out. If the employee is electing benefits such as health, dental, some of those other qualifying expenses, then you're not paying taxes on it. That's one of the reasons why a lot of contractors work with an appropriate provider to set up a 401k account where the wages in lieu are actually paid into the retirement account. And then because it's a contribution through there, there are no employment taxes on that. So make sure that you explore that option. Another question here, if acting as a subcontractor, please advise how the updated wage determinations are flowed down. Again, it's going to be your prime. So your prime is going to get a mod to their contract from the government, and then they're going to be issuing you a mod to update the new wage determination in yours. Next question, what's the best practice when there's a mixed contract, some SCA and some non-SCA? So I don't know that I think the answer that you're trying to get to is that you're going to have CLINs. You're certainly going to have labor categories on the contract that are identified as SCA and some that are non-SCA. You want to make sure that you've got the appropriate pricing, right? So you're going to clearly identify those on your proposal. You want to price them with your SCA rate versus your non-SCA rate. You're going to make sure that that's captured correctly in the project setup and in your accounting and in the timekeeping, so that that flows through there correctly, and that you're invoicing correctly, right? That you're invoicing for the SCA rate versus the non-SCA rate. All right, I don't see any other questions. I got a couple of other pieces of information for you. The presentation is available for download. You should see a little download button in the lower left-hand corner of your slide or your browser window there. So some links to information that'll be helpful to you. You can connect with us and follow us on social media. You'll be able to find the video recording. You can come back here to the Flow app to get it. It will also be uploaded to our YouTube channel. When we send the follow-up email in the next 48 hours, we'll have links to all of this information. You'll be able to access it on our website. You can always email us with any questions, support@leftbrainpro.com. And again, go check out our YouTube channel. All of our videos are out there. I think we're up to 36 or 38 right now. Check out the ones on the indirect rates that I mentioned earlier. And make sure that you sign up for future events. I'm in the process right now. We've got topics and everything lined up through November. You'll be starting to see the rest of those titles and some follow-up emails. But you can always go to our website, click on events, and see what's open and be able to click and register from there. Again, CPE certificates will be sent via email within the next 48 hours. We do thank you for your time and participation today, and we hope to see you again next month. Take care and have a great day.